Portfolio Manager Phaswane Mphahlele joins us now to expand on the latest market activity. A good evening to you. Do talk us through what moved global markets today.
Afternoon, everyone. Looking into the markets, markets have been fighting with a bit of positive negative gamma, and this is at the back of the risk dynamics having been broadening out since we started Q2, and this is at the back of the economic data that has been come out globally. It's been tilted to the fact that there is growth coming into the economy in Q2. Whether you look at the global manufacturing business activity that is to come, look at China or US, and the signaling of commodity prices going higher, of gold yields that's going higher, and the only problem with investors now they worry is that inflation comes along with these kind of moves, and therefore they're sitting there readjusting some of the interest rates outlooks, remaining very cautious as today they wait for the Fed to speak, and while they still try to risk manage some of their geopolitical risks that are taking place, and that's why we're seeing generally a mixed picture globally with the US up, Europe up. Well, locally we saw some hammers there. Only some of our rent hedges, especially in the mining space, did some green shoots.
Talk to us now about how commodities are performing.
Well, with the whole development around inflation and growth coming into Q2, and some of these commodities doing well, having a positive relationship with the dollar, we're seeing a commodity index, which just today they were up 0.6, with some of the biggest gainers to it, where the likes of oil, it was up 0.5 today at around $89.73. And it was supported by the increased supply and risks that are coming into the market through those geopolitical tensions. OPEC there has sat down and said, hey, we don't want to make any changes on the output cuts. And now the market is generally just missing out on pricing fully. The demand is being underestimated while supply is being capped. And this is giving oil an opportunity to now fight with the likes of 82 before looking at anything further. When you look at the likes of looking at copper, it was up 2% around $4.17 a pound. And this is at the back of those activity numbers we're seeing. Whether you look at China or the US, it's helping copper go higher. Gold prices was also all-time highs there. We're seeing it was up 0.1 right now at $2,283, and it's at the back of it. It remains very cautious as it waited for the Fed, but it remains very bullish as it waits for the Fed to speak. If there's any changes in its tone or anything new, it might be priced differently. But if everything remains the same, gold might challenge the 2,300 level, and as we move forward, it was also supported by those geopolitical tensions. We see silver also there. It's doing very well. It's benefiting as investors looking for safe haven assets. And the fact that we've seen a level of different pricing around the bets now easing back around June cuts, as they've seen service report numbers coming out of the US have slowed down, giving investors some sense of confidence that they might see rate cuts still coming in June.
Finally, what's to be said about developments around the rand along with its emerging market currency peers?
You know, when we look into the currency space, with the whole uncertainty around policy, when people look at monetary policy and having, because investors are always readjusting the interest rates outlook at the back of economic data that changes from time to time, we see the likes of the US dollar that is now has eased slightly, but still keeping that 104 level, and seeing emerging market currency being relatively mixed. Take the likes of the Chinese yuan, it was still consolidating some of its positions as the central bank continued to sell some of the dollar, and but the dollar is not being able to overlook it, as the dollar still bringing pressure. And when we look at some of the Indian rupee, it's actually fighting right now with the Chinese in terms of money flow, because the trade between buy China and sell India is now taking place and gaining momentum. This is increasing expectations around investors. The central bank might want to even try ease some of its Indian rupee in order to fight with the likes of China on the export markets. When we generally look at the rand, it has managed to show some gains today. It's at around 1871, and this is at the back of those cuts that might be coming back on the table. When a few days ago, it was yesterday, yesterday it was 50-50. Investors, the rand is also benefiting from the fact that some of our commodity prices have shown some gains, and economic data right now is positioning some easing in the US. So that's why we've seen some gains in the rand today.
Thank you, as always, for your input. That's Phaswane Mphahlele from Fund Managers talking us through.